Okay, hello. So now we're going to work on inputting our tax return into ProConnect, which is a software program that the version that we have is for education purposes, but they do also sell a version that is for actual tax return preparation. And there are lots of other programs out there as well. So what I want to tell you is, first of all, learning any software can be frustrating at first. You may know where you want to put it, but you can't find exactly where you should put it, and so it just entails playing around. I'll also tell you that about weekly they update these types of programs and things change. So when you finally learn one thing, it may change where you need to input or how it shows up. So just be aware that this is true of all software that you use, no matter what field you go into. So I'm here to help you navigate it, and just want to also encourage you to look around in it, play around in it, and know that the more you get comfortable with this software, the easier it will be for you to navigate any other software as well. Okay, so I've opened up my ProConnect, and it has a lot of information on the screen. So I want to tell you the first thing that we want to look for. This says tax returns 2018. Well, we are going to be doing a 2020 return. So I'm going to use that drop down arrow and open up 2020. Now you can see that I have not yet done a 2020 return. And like software, our tax forms from the IRS change all the time too. So you'll probably see me going in here and seeing things that are a little bit different. And I'm going to let you watch me do this. You're going to do it along with me, or you can watch this and then do it afterwards. And that's how we're going to learn to do this. Okay, so I'm going to create a new return. And I don't have this client set up yet. So I'm going to say add new. And this is a business return because we're doing a corporation. So I'm going to click the radio button because we're going to be doing a Form 1120. That is just simply the IRS form number that we use to prepare a C corporation return. All right, so our business name is CRT Corporation. I think that's what we called it. And we gave it an employer identification number. And you can be looking at your Excel sheet as you go. You can print it or look at it on a split screen. But we gave that employer identification number the number 45123-173. If it doesn't let you do that one, make up a different one. Oh, evidently I need one more number on that. Because it won't let you do one that's already been taken. So just use a number until it lets you take it. We don't need an email address in here, so you can leave that part off if you want. The street address is, we told it that it was 123. Well, where did my information go? I'm going to use the back button. Back button wasn't a good idea. Okay, so for some reason, every time I put in my email, it just kept making me start back over. So I left it off this time, and I'll hit save. And hopefully that'll be the only glitch I come into. All right, so the tax return type is Form 1120 because that is a corporation. So I'll choose Form 1120 for the corporation, and I'll verify that, yes, I'm doing the tax year 2020. This is very important. And then that my tax return name is going to be CRT Corporation. And so once I'm happy with that, I can hit save. You may have to look around a little bit on your screen, but my save is right down here, so I'm going to click save. All right, and so it says that I have these tabs up here. And so I've got profile, input return, check return, and file return. I'm mostly going to be using input and check return. So let's go ahead and go to input return first. And it's going to have a lot of different boxes. And I will tell you that you only need to fill out what you're given. So this is very different than if we were doing an actual return where you might have to have a certain amount of information in order to e-file. But in this case, we only have what we're given, and so we're just going to put in what we're given. So we were given a company name, we were given an EIN number, we were given an address. We weren't given a telephone number and all the other things, and so we don't have to put it. We are given a date incorporated. If you go back to the overview in your Excel, it says that they formed the corporation on February 10th, 1991, so we do want to put that in. We weren't told where, so we'll leave that part off. We can use the same date for our day that it began. We were given a business code, and a business code just describes to the IRS what we do. We were told on that overview sheet that our business code was 448110, and we can see that that is retail trade clothing. All right. We were told that they use the accrual basis, so we'll choose accrual there. We were told that we have 2 shareholders, so we'll put that in. If you'd like to put in your name for your preparer, you may. All right. So next, I'm going to look down this form and just go to the next one down, and it asks for officer information. We know that we have 2 officers. So notice that we have tabs here. So this is one officer, and then if we need another officer, we'll do an add. So our officers' names were Connie Smith, that was the first one. And we were not given home addresses, so we'll just leave off all that. We were given a social security number, so you can put that in for her. And we were told that she was the, I think it was secretary and treasurer, so just pick one of those. And she owned 50% of the stock. All right, next I'll do the plus to add her spouse, and his name was Toby Smith. And we had an social security number for Toby, so looking at that overview sheet in Excel, I can see that it was 225778890. Again, if it won't take it, put in something different. And he also has 50% of the common stock. All right. So at this point, what I want to encourage you to do is after every couple entries and before you forget what all you entered, I want you to go and see if it's showing up on the return where you expect it to. So let's go to check return and see what a Form 1120 is looking like so far. So I click check return, and then I click on forms because we want to see Form 1120. And then we're talking about US. That means our federal tax return. We're not worried about the state, which is Mississippi for us, but US means our federal tax return, which is all we'll be doing in this class. And then you can see it has letter, worksheets. Go down to 1120 because that's the form that we're doing, and this is the beginning of our Form 1120. So far, you can check that you've got the name and the address correct, that you've got the employer identification number right, and the date that it was incorporated. You've got your preparer information down here. All right, let's go to the next schedule that it's already created for us, and it is starting to talk about the persons who own our voting stock. And if I look down here, it actually lists my 2 shareholders, and it says that they have 50% of our stock. So everything is looking good so far. So let's go back and continue to input. So I go back to input return. Okay, so I've entered in my officer information. Next, I'm going to go to miscellaneous information. And I probably will not need to do much of this at all because we are not electronically filing, and so we can just skip that. Payments, penalties, and extensions. It did tell me that we made a payment. Remember, we had some estimated tax payments because we have to pay in our taxes over the course of the year. You can't just wait and pay it all in at the end of the year with the return because you'd have a penalty. Your taxes due as it accrues during the year. So they did make their estimated payments. If I look on my sheet, I found that information in the overview, I believe. I'm looking for it. You can look for it also. Maybe I put it on the income statement. Yeah, I put it on the income statement. It says estimated payments $46,000. So we want to look and see where can we put in those estimated payments. So I'm going to click on estimated tax and see if that's where it is. So in this case, it's given me a place to put in all 4 installments. And it may be that I paid that in equally over the whole year. I'm not sure. But instead, what I can do is I can just say, treat all voucher amounts as amounts paid, overpayment from 2019. Let's just put it all in as $46,000. And we'll just say we paid it all up front. That way we won't get a penalty since we were not given that information. But normally you would look at your company records and you would find out exactly when it was paid. And you would put it in as these installments and on the exact dates. All right, I'd like to know if that came out right and that it showed up. So I'm going to click check return, and I'm going to go to Form 1120. So Forms US 1120, and I'm hoping to see that payment at the bottom. Here it is, total payments, $46,000. So yes, it showed up correctly on my return, and it's showing that I did pay in $46,000. So now I'm going to go back to input return. And I want to encourage you to always check, especially on the first few returns that you do in a new software, that what you input is showing up where you expect it. If you get too far along, then you'll forget to check for all of your numbers. Okay, so next we'll go to income. I'm going to click on the word income, and it has a place for my gross receipts or sales. So this is where I'll look at my tax return income, and so you want to make sure that you get your tax basis. So that other column, let me show you where I'm looking, and I want you to get this off of yours. Don't just try to type in what I'm typing in. Print this out or have it open in a different screen and put in these numbers from your work, because that way you'll learn. But my gross sales is $1,045,000, so that is the number that I will be putting in. Okay, and then I did have a sales, returns, and allowances, and I'll be honest with you, the question right now is, do I put it in as a plus 50,000 or a minus 50,000? Because we know that it's going to subtract. Well, normally in most softwares, if it says less returns, then you'll put it in as a positive because the software is going to automatically subtract. But because we don't know for sure, we should try putting it in as a positive, click on check return, and let's go and see what it did do. Forms, US, says I have a problem fetching the information for my return. Not sure why. Try it again, US 1120. Okay, and I have my $1,045,000 and the 50,000, and then it does do a net here, and I can see that it did subtract it. So it was proper for us to put it in as a 50, and the software will in fact subtract it out. So we can keep going now. Input return. All right, so we're still under income, and we put in our gross receipts less the returns and allowances. And so now the next thing that I see on here is my interest income. So we're going to look at our interest income, and we remember that we have two types of interest income. We had one that was tax exempt, this $4,000, and another that was taxable, which was the $6,000. And so we're going to look and see what to do. All right, so tax exempt interest, it has a spot for it. And so we're going to call this state bonds, and the software is going to likely know exactly what to do with that. So I'm going to put in that my state bonds gave me interest of $4,000. Okay. And then we have regular interest, and this was from certificate of deposit, which was taxable interest, and that amount was $6,000. That one should be taxable. So now what I want to do, I know that my total was $10,000, but only $6,000 should be taxable. So I want to click onto my tax return and make sure that this software is doing what I want it to do. So let's go to check return. Let's go to forms, US, and it said there was a problem, but it said that last time, and then I clicked again and it was okay. I think it's just taking a minute to catch up to me. All right, and so how much interest is it putting? See how on the tax return it's only putting the $6,000, and that's true because the other $4,000 is not taxable. So where is it putting it? Well, it's a Schedule M1 adjustment. So let me show you the Schedule M1. I'm going to scroll through my forms, and Schedule L means balance sheet, and Schedule M1 are my adjustments. And it put that $4,000 right here, tax exempt interest. Now let me tell you a little bit about this. First of all, the net income per books is not right yet because we don't have enough stuff input for it to be able to calculate. But all the adjustments on the left-hand side are things that add to taxable income, so they're known as unfavorable adjustments. And everything to the right are things that subtract from taxable income, so they're known as favorable adjustments. So tax-exempt interest is a favorable adjustment. So that tax-exempt interest was included in income for books, but it is taken out of income for tax, and that's why it's called a favorable adjustment. All right, so this is good news. Everything's showing up properly so far, so we'll go back to input return. Next, we have our dividend income, and we did have some dividend income from a 20% owned corporation, and so we will learn that that is subject to a 50% dividends received deduction. So we will put in the entire amount, which was $60,000, and again, I'm getting that from our spreadsheet. $60,000 is the total, and then we're going to expect it to automatically take a 50% deduction. So I put in the 60,000, and then I go to check return, and I want to see if it took that 50% deduction. So I'm going to go to check return, forms, US 1120, and the 60,000 is showing up in total up here. That's my dividends, and it's called dividends and inclusions, and so I can see it. And then I come down here, and it has $30,000 as a special deduction. And if I go to the Schedule C that it references here, I'll be able to see that that is my dividends received deduction. So I'm going to scroll through my pages until I get to that dividends received deduction form and show you what it looks like. Okay, so here it is. It's on the second page, and it says dividends of $60,000, and it showed up on the line that's going to take a 50% deduction. So we can see that it took that $30,000 deduction, so we're only going to be paying taxes on $30,000 of it. So just note that it reports all of the dividends up here, and then it takes a special deduction down here on this line, and that is your dividends received deduction, which you'll learn about in this chapter. Okay, so let's go back to input return. Remember, we're still working within the income section. All right, so we have our gross receipts, we have our interest, we have our dividends. So I would take a look now and see if we have any other income to think about. So remember, income is on the credit side, and we've taken care of all of our income, which means that we are ready to look at our deductions. All right, so under income, the first deduction that I see is cost of goods sold. So remember how we calculated cost of goods sold? Let's look and see. At the bottom, we had to start off with beginning inventory plus purchases minus ending inventory equals cost of goods sold. This is where we're going to report this. So our schedule of cost of goods sold, our beginning inventory was $200,000 per our Excel, which we got from our balance sheet. Purchases were given to us at $506,000. We didn't have any cost of labor or 263A expenses, so we can just skip all of that. We didn't have any depreciation. We do have to put in our ending inventory, and then it's going to actually calculate cost of goods sold for us. So ending inventory was $256,000. All right, so now I'm going to go to check return. I'm going to make sure that it gets the cost of goods sold that I expected. So I'm going to say forms, US, form 1120, and under cost of goods sold, it calculated it to be $450,000, which is what I wanted. And it also completed my cost of goods sold section that I report to the IRS. And let's see where that is this year. Things move around. I have to actually I have to click on it. It's right here, 1125A, and that is your cost of goods sold schedule. And here you can see your beginning inventory plus purchases minus ending inventory gives you your total. And you can mark the boxes according to what they told you. I think they said that they use lower of cost or market. That's not going to affect our tax return, so you don't really have to worry about that. Okay, so I'm going to go back to input return because everything's looking okay for my cost of goods sold, and I'm going to go to deductions. So now I'm going to be looking at my other deductions. So I'll look at my Excel spreadsheet again, and the first deduction after the cost of goods sold that I see is officer's salary. So I click on deductions, and then I see officer's compensation, which is the same thing as my officer's salary. And the IRS does require us to give some information about this. So here's Connie, and we're going to say what her compensation was. And I believe they said it was evenly given. So the total was 140, but we gave it to them evenly, and this is actually given in the problem. So it's $70,000 for her. And then I'm going to click on the next tab, and Toby is the other $70,000. So click on Check Return, and then go to US, and then go to Forms. And officer's compensation is on Form 1125E. So the fourth one down from 1120, click on that, and we can see that it is nicely filling in the schedule for us. And we can see the compensation for both Toby and Connie. All right, let's go back to Input Return. Looking at my Excel spreadsheet, the next thing that I have are just some salaries for Clerical and Office. So I'm under Deductions. So I clicked on Deductions right here, and I'm going to start to just look for places to put in the information that I'm given. All right, I have accounting, advertising, answering service, audit truck, bad debts, commissions, cash contributions, depletion, gifts, insurance, interest. I do have that, so I'll come back for that. Meals and entertainment, miscellaneous, office, postage, printing, rents, salaries and wages. That's what I'm looking for. So salaries and wages other than officers, and that number was given at $100,000. Okay. So we already put in our officer salaries, and this is just an override place. Usually overrides are not a good idea. So if you can find the actual place to put it in, it's usually better. Sometimes you have to override, and you'll get to know each software to know whether or not you need to, but we already put it in, so we don't need to use that. So the next one we have is our taxes, and it was state, local, and payroll. And so we don't have a good breakdown, so I'm just going to use this other and describe it as they described it to me, which was state, local, and other, and I will put in that amount as the amount that was given, which was $35,000. All right, let's just go see what this is looking like so far. So we put in our other salaries, and then we just put in our other taxes. So if I go to Check Return, and I go to Forms, US, 1120. So it's filling out nicely here, and I've got my taxes as $35,000, and it may have given me an extra schedule where it gave me, I don't actually see it right now, but it did put it up there, so that's all I need to see. The $35,000 is my taxes, and then my other salary is showing up on the proper line. It says salaries and wages, and it's $100,000 for my people other than my officers. So let's go back to Input Return. We're still working under the deductions. And the next one that I see on my Excel spreadsheet is repairs. So I'm going to look for the best place to put in repairs. And again, once you get used to it, it's easier to find things. But for now, I'll just keep looking. Repairs and maintenance. And the amount was given to me is $20,000. The next thing that I see is interest expense, and I had two types. I had the non-deductible one and the other business loan. So I'm going to look for my interest place. About halfway down, I find interest, and it just has interest for current year. So I'm not able to break out my non-deductible and my deductible interest. So when that happens, I'm just going to put in my tax amount, and I'm going to have to put in my M1 separately. So my deductible interest, I look on my sheet, and it is $10,000. While I'm thinking about it, I want to put in my non-deductible interest. So I'm going to go over to Schedule M1. So we're going to go to all so that we can see other forms. Here's income, here's deductions. We're going to go to balance sheet, And underneath the balance sheet is our Schedule M1. So Schedule M1 is what we're working on. And we've got to put in that $2,000 non-deductible expense. So it's going to be unfavorable. So that is an expense that was on the books, but we can't include it on the return. So I'm going to look at this section right here. Expense recorded on the books. That $2,000 was expense on books, but we can't expense it on the return. And so I'm going to just look through here and see the best place to put it. It's not business interest expense. It's actually a that's for something different. And so we'll call this interest expense for tax exempt bonds. All right, and that M1 difference was $2,000. Again, we want this to show up on the left side of our M1 because it is unfavorable. So let's go check return and make sure that it worked out the way that we expected. Forms, US, X out of there, give it a minute to think. Looking for 1120, and then here's your balance sheet and here's your M1. And here it is. It came up under the unfavorable section and it came up under other. And there'll be a schedule that will print out with this that'll tell us what that was. So we have an unfavorable adjustment right there. Okay, and take note, we did not include it over here because this is just tax basis. So if it doesn't need to be here, then you don't put it there. So the reason that we did this one differently is that earlier there was a place to put tax exempt interest, so we knew it would take care of it for us and put it on the M1. Here we didn't have a place, so we had to not put it here and put it on the M1. All right, so the next thing that we have is advertising expense. So let's go back to input return. Let's go to deductions. Talking about deductions, so we click deductions again. And advertising is given to us at $8,000. Then we have rental expense, so we're going to go and look for rent expense. Rents, we'll assume it's personal property, they didn't tell us otherwise. Depreciation, we're going to have to override this because they did not give us any details. So depreciation, we're going to override it because we don't have the details of the individual assets to input. So depreciation is $16,000. And then they gave us some other deductions. So we're going to look down here and look for a nice place to put in other. We'll just call it other deductions, $21,000. Okay. So double check that I put in the 16,000. A minute ago, my 16,000 was not showing up. So I clicked here and then I went back to depreciation override and I made sure that I had 16,000 in there. And then I can check and I do get to my 207,000 taxable income, which is the amount that I want. So I'm checking that number to this right here, which is my taxable income, $207,000. So everything is showing up properly. All right, and then I'll just double check that my tax return calculation is right. So then it says total tax is $43,470. The tax return software calculated that. And I look and that is what I expected, $43,470. And then it says that I made estimated payments of $46,000 and I'm expecting a refund now of $2,530. And that is what I had calculated right here. So you always want to make sure that what you expect is what's showing on the tax return that you plan to file. Now we're not finished yet, but we are finished with our page 1. And so now we need to work on our balance sheet. So on your balance sheet, we're going to go back to input return and let me show you what we're talking about. We need to fill out this and it needs to be our book numbers. And then we need to make sure that our M1 and our M2 are also correct. So I'm going to go back to input return. And this was income, this is deductions. And so I'm going to go down here to balance sheet. I'm going to click balance sheet and then assets, liabilities, and capital. Now usually you're not able to input your retained earnings. It needs to calculate it. And that's why we did that M2 so that we'll be able to calculate it. So let's just put in what we have and see what happens. So I'm looking at the balance sheet tab right here. And I want you to look at yours and input yours from that, and then we'll come back together and check it. So I'll talk out loud, but you can just do this on your own as well. So cash beginning was $240,000. Cash ending was $178,850. Accounts receivable and notes receivable was 104, or trade 104.2, 142.3. We didn't have any less allowances for bad debts. Going down to inventory. I'm not going to put this in because it should read from the inventory because it says if it's different than what we input for cost of goods sold. So before I get any further, I would like to go and see if it's pooling correctly. So I'm going to go to check return, forms, US, 1120, scroll to page, schedule L. All right, and then inventories, it is picking up 200, which matches, and that is 256, which matches. So I really want to reiterate that no matter what area you go in, tax, audit, or some other completely different field, going and checking to see if what you expect is what you're getting is so important. So I know it seems like I'm checking my return a lot, but it really is a learning process. And then once you've used the software a while, of course, you wouldn't have to do that. But for right now, as we're seeing how the software works, it really keeps you on track and doesn't let you forget to go back and check something later. Okay, so I don't have to put in my inventories because I saw that it was already coming up there for me. Next on my list, I have certificates of deposit, which were 150, both beginning and the ending, which is going to be a CD, U.S. government taxes and prepaid. I think I'm going to have to put that under other current assets because I do not see a place for just CDs. So we'll say certificates of deposit. Beginning was 150,000. Ending was 150,000. I might have seen a place for state bonds. Let me go back and look again. Government obligations, tax exempt securities. Yes, that's where that would go because state bonds are tax exempt. So we will report state bonds there. Prepaid federal tax, we have that as well. None for the beginning of the year, but they gave us $2,530 for the end. Stock investments. We don't have a place for, oh, we could put other investments. That might be where the other one should have gone as well. Stock investments is 300,000 and 400,000. Now let's go ahead and we're going to move the other one to an investment because our certificates of deposit, I don't know, that might not be considered an investment. That's pretty current. I'm going to leave it where I put it. Okay, say okay. Now we have buildings and other depreciable assets. 120. That stayed 120. Our accumulated depreciation was 44,400 and 60,400. We want to double check that it subtracted it, but I'm sure that it did. Less accumulated depreciation. Then we have a non-depreciable asset, which is our land, and our land was 10,000. Then we have another other asset that they just called other asset, so we'll put that under other, probably long-term asset, since we're in the long-term category. Means that we plan on or did hold it for longer than a year. Other asset, 1,800, and then 1,000. All right, let's make sure that our total assets equal what we expect them to equal. So here's what I expect them to equal, and now I will double check that. $1,181,600 is correct. 1,300,280 is correct. So now I'm ready to work on my liabilities and stockholders' equity. So my total assets are correct. So I'll go back to input return, and then I will go to assets, liabilities, and capital, and I'll work on the liabilities and capital portion. All right, so here's my liabilities. So my first liability is accounts payable. And ending is 125,000. And beginning was 150. And then my next one is other current liabilities. And so I don't have a breakdown of that, so I'll just simply type in other current liabilities. And the beginning of that is 40,150 and 36,300. Mortgage is 105,000 and 100,000. Capital stock, which is the same thing as common stock, unless otherwise said that it was preferred, and they said it was common, so we know it's common. 250,000. All right, retained earnings. We needed to calculate this. So we probably have to put in the beginning retained earnings, because I don't believe that it would have any way of knowing that. And this is unappropriated, so that is our retained earnings that is available. So we're going to put in 636,450. Now, we have not yet told it that we paid some dividends to our stockholders. So we need to make sure that we put that in, or else it won't be able to calculate our ending. So I'm going to go to our retained earnings schedule, which is schedule M2, and I'm going to put in our cash distributions of $35,000 because we were told that we paid dividends of that. Now we need this to calculate our proper net income, so let's just look and see what we have so far. I go to check return. And a lot of times you're going to be off, so I just want to warn you that we probably will not be on first try. So for beginning balance sheet is looking good because total assets equals total liability. So the 1,181,600, we are in balance, so that's good. But we are off in our ending, and that's because our retained earnings is probably not quite right yet. So let's see what's going on. So we look down here to retained earnings because this number, 844.50, is what comes up to this number. All right, and so if this isn't correct, then our balance sheet won't be in balance. So it's probably that this number is not correct yet. And it's probably because our net income is off. And I can tell you what our net income should be off by, and it is this federal income tax per books that we need to put in. So our tax expense is an M1 adjustment because we cannot deduct it for tax, but it is deductible for books. We said that earlier, but we did not actually put it in. And evidently our tax return did not automatically put it into us, so we will put that in now. So I'm going to go to balance sheet and schedule M1 and schedule M1 under input. And it says federal income tax, and it says automatic if accruing, but since I know that it didn't put it in there because I didn't see it, I'm going to put in my total tax that we calculated, $43,470. All right, now I'm going to go back to check return and see if I'm closer. All right, so it did show up here as an M1 adjustment. And then I know I'm not quite right yet because, well, I may be. 237 is correct because my income that shows here is before dividends received deduction. So I can see that 237 right there. So dividends received deduction is a special deduction, so that's tying. Let's go see if this matches. 130. Oh, I need to make that bigger because it's, let's see if I can make my screen bigger so I can read it. Yeah, I'm still off by $8,000 exactly. All right, so I'm off by $8,000 exactly. And by the way, this is very normal to have to go back and figure out what you didn't do. And I actually know what I didn't do, and I'm going to show you how I figured that out. I'm going to look through here, and I see an $8,000, so I'm going to ask myself if that's okay, and that is because I took care of that. But I see another $8,000. That one's not okay. I highlighted this, and I told us that this was going to be a unfavorable deduction because we can't deduct it for tax, but it was deductible for books. We didn't include it on the tax return, page 1, which was correct, but we did not remember to put it on the schedule M1. So that's what we need to do. So how did I know that we'd forgotten something? Well, because my balance sheet wasn't in balance, and because I made my taxable income look okay, so it was okay, but the way that these all work is that it backs into my net income for books. And so this cannot be correct until I have accounted for all of my Schedule M1s. So let's go put in that M1. All right, so Schedule M1, and this is life insurance premiums that are not deductible for tax. So that's an expense that was on the books, but it's not on the return. So we're going to look through these that are available, and they have a line item specifically designated as such, officer life insurance premiums, not deductible. So we're going to put in $8,000, and then we're going to click check return, and then we're going to go to Forms, US, 1120, scroll down to page Schedule L. It used to be Schedule page 4, but nowadays it's Schedule 6, so I always hesitate with that. All right, my taxable income is still correct before dividends received deduction. I now have both the $8,000 and the $2,000 showing up for the total of $10,000, so my net income per books is looking more correct. We can really see it if we see that our total assets does in fact equal our total liabilities and stockholders' equity, and they are in balance now. So that's a really good indicator that I'm probably correct. Also want to see if my retained earnings roll forward matches what I expected when I did my Excel. So let's look at it and see. We did that on the balance sheet. So we had 636. Oh, it did that to me, didn't it? Just because I moved it up a little bit. Come on. 450, then 187, 530, and then that's just a subtotal minus 35,000 for dividends for a total of that. So that does match what I expected. So I believe that my tax return is correct and ready because I made sure that my page 1 had everything on it, and then I made sure that my balance sheet has everything on it, and my assets equal liabilities and owner's equity or stockholders' equity for both beginning and the end of the year. My Schedule M1 is correct, and my Schedule M2 is correct. So that is just an overview of how to work a tax return. And I know it's a lot of information, but I wanted you to see the process that I go through and the checks and balances that are in it in order to come up with a return. So let me know if you have any questions. Okay, so you will submit your Excel workbook that you completed, and then you will submit a PDF of this return in your ProConnect. So here's how you'll do it. Click on the tab that says File Return. And then you can either select all, or I just select what I want, which is 1120 Schedule G, 8879, 1125A statements, and 1125E. That's what I want. So then I'm going to say, and I did that under partial print, by the way, partial print. And then say Create PDF. And then download PDF, and then you're able to download it and save it to your computer by doing that, and then submit that. So let me know if you have any questions at all. Thanks.